Yo, okay. I don't know if I'm just slow. Okay, I'm not slow. But I don't understand risk management and risk to reward. Because I would hear about it. Yeah, risk to reward this, risk to reward that. And it's like, okay, I understand, sort of, but I don't really know what to do with that information, if that makes sense. And it hit me yesterday. I was like, because I was just like analyzing. I know it was a Saturday. I was just looking and like, oh, if I entered here, the risk reward of this, I would have had a 104. Then I calculated roughly how much I would have made, and I'm like, oh, sorry, I'm watching this guy analyze Man United. I'm like, huh, that's why risk management is important. Because watching the size video base breakdown, okay, if you have a $1,000 account, right, and you risk $100 a trade, which means you have 10 times before you lose the trade, before you blow your account, sorry. So he's like, you, how do I say? Enter the trade, $100, aim for 104, 105s. If you get a 104, it's $400. But let's say you lose those three accounts. You lose three trades. Then that fourth one hits. Not only did you make up your losses, which is $300, you also $100 up. I'm like, okay. So I understood it, but it never clicked. If that makes sense, like it never clicked in my head. It's like, excuse me. It's like, oh, okay. So this is what you mean, you know? So, and then I started calculating, okay, I had 10,000 Rand. I'm worth 2,000 Rand each trade. Aim for 104s. Sometimes I get 105s, it's fine. But if I just stick to a set risk to reward, I don't go below that. I can aim for higher if price gives me that, but I ultimately aim, that's like my basis. Because every time I was trading, I wasn't really thinking about risk to reward or risk management, like aiming for 104s, 105s. I was just say, okay, I'm gonna enter, I see money, I'm out. And I'm seeing how this is very important and how it can help you and how it's helping me understand, like, oh, okay, this is what I need to be doing. This is how I'm supposed to be aiming for these trades, essentially. Because I'll just enter and just, okay, if I see my target is this much money. Nah, because the money part is cool and all, yes. But then I feel like the risk management side of it, the RR is the better part. Because it's like, I don't know. I just had an aha moment yesterday. I was just testing it out. So, for example, we have this. They had the indication, and it was price was correcting, doing its thing, and then came. I don't know what session it was. No. Okay, I'm not seeing anything in the 5 minute. Let's see. Damn. So, for example, remember price indicated, then it was correcting on that. It was still correcting. Didn't have enough momentum to push up, and corrected heavy. So, had I entered here with this candle close, this was gonna be too high. I was gonna wait for it to push down, then push up again. So I could have entered here, right, off of this candle closure. Put my stop there because that's the low we have. Then I target that high. Essentially, this is actually a 107, which is even more. So I would have I would have made, let's say, 1,000 Rand. I would have probably made 7,000, 7.5, 800, 8,000 Rand. And that's like, damn. And then I stick to that risk to reward. Like, I don't look at the monetary side, I look at the risk to reward side. So, even though it's off, it's still heats up. So, Yeah, man. Like it's crazy how I didn't understand that until it clicked. I'm like, oh, I need to aim for these wonderfuls. And I know with ICC, you use it to kind of swing trade or day trade. He preaches swing trading, and oh, this is what clicked for me. It's like, okay, I don't really need to swing trade yet, because obviously I don't have that capital to swing trade like he does. So I'm gonna start with day trading, because as much as he tells you like do this, yeah, he is trying to help, but he's speaking from a point of view that he's doing it, and how yes, it works for him now because he has capital and he can afford to swing trade. I mean, you could afford to swing trade on a medium-sized account, but like he's just up there. But I think for starting off, what's gonna work for me now and what could work for the beginners is that yes, you could trade in session. You'd rather start off as a day trader, and then you aim for these one of fours. Don't look at the money side. Look for the risk to reward. Are you risking less to potentially make more instead of aiming for one on ones, one or twos, bro? That's cool enough for maybe big hedge funds, but I think for us retail traders, aiming for these one of fours is key, bro. I could aim for one to threes, but I am sticking to one of four. I'm sticking to one of four and above, and that could be with day trades, not just swing trading. I mean, it could be a potential day trade, swing trade if I'm holding today and the price is gonna play out and I expect it to hit that TP the next day. But if I'm comfortable and I've made way more money than I made, okay, I basically replaced my job, then I could just go in the markets and aim for one of fours. Take a setup today, chill tomorrow, take a setup on Thursday maybe, and I'm done for the week. I know that I've basically replaced my job that time, depending on how much I made. Or I know that, okay, I'm already well halfway or more than halfway, 80-90% to replacing my job salary. And then I know the next week I come back in for another one for. If I lose, it's fine. I didn't lose that much because I'm still up for the month, I'm still up for the week, I'm still up for the day. Okay, I won't trade the same day, but I'm still up for the week. And then that's when you hear me like, nah, I don't really need to swing like that. I mean, there are times where price will swing because I'm seeing now with a lot of the other pairs that I was trading, like I'll try and swing them when I was just like forward testing, and the price wouldn't really go hit that level because market's gonna do what it wants to do essentially, so you can't really like fault it. Damn, why did it take me so far back? So far back. Okay. But yeah, so these are the one of fours that I'm talking about, bro. Like you just aim for one of fours and then you're solid, bro. One of fours above and then you're solid. Because there's really no need for you to like, how do I say, you can swing. I'm gonna swing eventually. Trust me, I'm gonna swing. But I wanna just be comfortable. This is all about finding your own edge and your own way of trading. Yes, he taught you what he knows, but ultimately it's up to you to realize that, okay, this works for me, this works for me. ICC still works, but in terms of the risk management side, I'm still gonna do the 10% per trade. Um, uh, I'm still gonna stack my capital, then risk 10% each trade, aim for one of fours and above. And if price allows me to even get a bigger risk to reward, then I could go more aggressive, not over leverage, but maybe just increase the lot size just by a bit because prices is put me in a great position to actually open a bigger lot size. Whereas I'm still risking my 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 initial 10%, but the how do I say it? Because let's say the stop loss is like it's not so far off, like it's just here, and we're gonna push down to here, and you can see prices already. I don't know how to explain it, bro. Like I don't know how to explain it. Like okay, this high, you see prices pushing down, you enter here, you put your stop loss here. Let's just try and do it. Let's just try and do it. Let's just try and do it. Prices closing, you see, okay, this is the best price to get in. You see, you can increase your lot size, still risk that 1,000 rand, because obviously when you put it on MC5, you're gonna see that okay, if I put my stop loss here, so I'm only risking like 200, 300, or I'm risking 500. Then you can increase the lot size until it gets to that 1%, that 10% that you're initially risking, because you're still risking that 10%. You're still sticking to your risk management. I mean, you could risk less, but you'll be making it more or less the same. Whereas you could you're making less actually because you're risking less. But now if you increase your lot size, but it's still within your parameters of your risk management and your 10% or how much you're willing to risk, your risk appetite. You increase your lot size, that way you're more aggressive, and then you enter the trade because your price gave you the best position to get in at. That way, even if you lose, you only risked you only lost $1,000 or $100 or whatever the case is. But you could have, instead of making, let's say 4K, 5K, now with this aggressive approach and this best position that you got into, you could have made 8,000, and it's still one of four, maybe 8, 9,000 or $600, $700. It's more than what you would normally make on a normal one of four risk to reward. So yeah, so price gives you the best position, like he says, putting yourself in the best position to enter trades, the most comfortable position to enter trades. That's why waiting for setups is very important. And I really don't care how, like, at this point, like how other people trade and how they say, oh, it's gonna take long for it to get here, bro. Price is not making newer highs, and that also is. I'll make another video on that. But anyway, yeah, that's what I realized, man. Like it's yeah. I just had an aha moment with risk to reward and risk management. So I hope that makes sense. It makes sense to me, but if it doesn't to you, then you can just comment or whatever. But I think you get what I'm saying. Like, you just increase your lot size, it's still within your parameters, your risk appetite, and you're just more aggressive because now you're in the best position. You can increase your lot size, not over leverage, because that's dumb. Because now price could just spike and take you out. Basically, just take you out, and then you lose $1,000. You will still fine. Except now you're losing more of your account, losing more profits. Because the whole point of this game is to stay in it for long term. So now if you're gonna blow your accounts, then yeah, it's really not gonna work out for you, bro. But anyway, that's what I saw, man, and I'm cool. I'm confident with this. I'm confident. Let me just put that there because it's a lower high. And then yeah, man. Yeah, that's it. Risk management 101 for dummies.